We are ready to go live. Yes, we are live officially only on onedealaway.com/live. My name is Nev. This is Money Matters. And today is, well, it's a weekend. It's a Saturday. Happy Saturday morning to you. We still don't know who the president is. We still don't know many things of people are saying it's rigged, it's not rigged, it's real, it's not real. Nobody really knows, and we're all waiting to find out what in the world is going to happen as I have forecasted, and I think everybody else has as well. So I can't be like, ooh, I'm a genius, because everybody has been calling it, is that we're not going to find out for a while. This is going to be the toughest, the longest, the most strenuous election that we have seen, at least in the last, 4-ish decades, maybe longer. And so it will be definitely an interesting one to watch, and what an interesting time that we're in. But we're not going to be talking about politics. We're not going to be talking about health, although both are incredibly important. We're going to be talking about what's happening in the market. So let's recap the week. Holy mother, that was crazy. And wow, I was wrong. I had assumed that because we wouldn't know who the president is post election, that volatility would go up because of this uncertainty, that prices might go down because of uncertainty. And guess what? Volatility down, prices up. And that is exactly what we're going to be discussing today. We're going to take a look at the markets and what's been going on. We're going to take a look at what the smart money is doing and how one particular country is destroying their currency and what is going on. I think there's a lot we can learn from there. And of course, we're going to be taking a look at Bitcoin because Bitcoin has been doing incredibly well over 70% return in a year, and way more, I would say about 5x, more than 5x by this point since the March low. Crazy. Absolutely crazy. We reached almost $16,000. This is, well, I was going to say unprecedented, but it's really not because we've been here in 2017, 2018, if you will recall. And now the question on everybody's mind is this going to be the same thing? Many people are saying yes. Most people are saying no. This is different, and I agree. This is different. We're going to be taking a look at some charts and why it's different. We're also going to be discussing ETH because ETH has been performing incredibly well. So, if you are interested to find out what's been going on in markets, why, what is the smart money doing, how are the governments and central bankers destroying money, learning from the prime example of what's happening in one of the countries named Turkey. Yes, that's right. I'm going to name drop here. And of course, if you're interested about cryptocurrencies, well, this is a show for you. Let's do this. All right, y'all. Happy Saturday to you. It is Saturday, November 7th in 2020. These are going to be really cool archives to look, 5 years from now and see what's been going on. So we've talked about a lot of things. I have so much stuff to cover, and of course, we don't have all day to do it. So let's get started. Let's do this thing. Before we do, I do want to welcome everybody watching this live on onedealaway.com/live. If you're here, make sure you sign in. If you don't have an account, it's absolutely free. Just go in and grab it, and it comes with a free course. How awesome is that? And then you can say hello, and we're gonna do Q&A at the end of the show as always. If you're watching this elsewhere, make sure you say hello in some sort of comment section somewhere if it exists. If there's a like button, smash it right now. If there's a subscription, hey, consider subscribing because maybe, just maybe, this could be worth it, and hey, it doesn't cost anything. And if they do offer some sort of alerts, hit them as well if you like what you're seeing, because without it, you don't know when the thing shows up, although it shows up just about every single day, unless I have some sort of event that I have to attend or travel to attend to businesses and that kind of stuff. So anyways, let's go in. First story I'd like to kind of get started with is what's happening in Turkey. Now, I guess with Thanksgiving around, it makes sense we talk turkeys, right? No, no, no. I'm talking about the country, not the meat, not the meat. Choked on that one. Choked on that one. But here's what's happening. So Erdogan is the president of Turkey, as you may know, and so he's gone through a few different central bankers, firing the latest one while they're experiencing a big currency crisis. And I think this is important aspect to note, because when we talk about hard assets, when we talk about different ways to think about money and assets and everything else, I think it's important to not forget the currency and the value of it in relations of how it plays with other currencies, with other countries, because we use it for exchange and for trade, right? But it also makes sense when you think about it for holding of the assets, things like real estate, gold, Bitcoin, right? Those are important things to also consider. So let's take a look at what's going on over here. So, faced with the lose lose situation of slowing growth, runaway prices, and slumping lira, which is their currency, Erdogan conceived of what is now known as Erdogan, Erdoganomics, say that fast 5 times, are the bizarre epiphany that in order to high inflation, uh, to fight inflation and keep the currency from plunging, all Turkey had to do was the polar opposite of what any other country in its position would do, and cut rates. So typically, what ends up happening is that if you have, uh, uh, you know, uh, prices going up, the value of your currency going down, and you're trying to kind of, slow that, you try to basically, sort of increase the rates to hopefully stop that whole piece. However, they do also have a problem of slowing growth. So this is the whole concept that is sort of scary piece that many individuals here in the United States have been talking about. You might have heard things of, oh my gosh, my brain just stopped working, but they call it Japanization, Japanification, something like that, where basically, right, the growth is slowing down, but the prices are going up. Now, I can't recall what happens with the currency or happened with the currency. I want to say it has gone down. But that's basically stagflation. That's what it is. So you have the prices going up, but the slowing growth, and this is the part that many prominent thinkers of our age in the economy are warning about of potentially happening in Europe and happening in the United States and likely around the world. So I think looking at Turkey is a very good and interesting example. And so when you try to sort of slow down the inflation, right, you increase the rates. And so Erdogan decided, forget it, man, we're just going to cut the rates. So he then fired a governor of the Turkish bank who basically refused to cut the rates when the inflation was surging. And he got a new person in who, of course, followed what he was told, and he reduced the rates since he was appointed in July, and bringing the cumulative easing under his watchdog to 16 percentage points, right? So, of course, it worked for a little while, contrary to most people's belief. Cutting the rates by 16% in under a year, economy had staged a modest rebound, but most importantly, inflation did in fact collapse. So, an interesting piece that we just kind of saw happen, right? But then what happened? Well, COVID happened. And of course, it all failed. Turkish lira started to slide. And you can see here 2016, 17, 18, it really took a dive. Kind of came back on up a little bit, took another sort of dive, came back slightly in 2019. It took a dive here, came back slightly, took another dive. So we're seeing very repeatable pattern of faster and faster sort of decline. You can see that it is faster and faster by just looking at the chart. And of course, eventually it surpassed the Brazilian real as the worst performing currency in the world, losing 30% of its value in 2020 alone. This is huge. Central bank ended its easing cycle back in September, resumed hiking the rates from 8.25 to 10.25. Now, this over here is interesting before we continue with the story because, well, the story kind of continues that he fired this person, which that's fine. So you can see that, yep, they're fired, they're gone as of last week, I want to say. But the interesting piece that happens here is that imagine you borrow money on a variable rate, right? The not the fixed mortgage rate that you kind of lock in at 2, 3, 4, 5 whatever percent that you have going on, but you actually get a credit card or a variable loan of some sort, right? And then all of a sudden, you are here, they've been cutting the rates, you're like, yeah, they're going to cut rates, they're going to cut rates, they're going to cut rates. You are enjoying this cutting of the rates because it's helping and supporting. And then all of a sudden, they just reverse the cycle and just jack the thing up on you. This is highly problematic. This is what we've experienced in 2007 8, right? Not necessarily with the variable rates, but it was the adjustable rate mortgage, right? Where folks were basically borrowing money, because real estate never goes down in price, right? Having multiple loans on their homes, continuously refinancing because you could, right? And all of a sudden, then you couldn't, and then boom, that variable thing kicked in, and then all of a sudden, your $500 a month payment on your home was $1,500 or $2,500, which is what caused a lot of people to say, I can't afford this, I'm out. People either walked away or just sort of tried to fight it or whatever, but that's kind of what happened. So this is the part that is very, very scary to me, that sometimes when we decide and make our decisions on some of the things, the craziness that we're seeing in the market based off of what we think is happening and is going to happen. And of course, we like the recency bias, meaning that we lock into the thing of it's going to keep on doing the same thing. So let's continue with the story, right? So of course, he fires him. He brings a new person, Agbal, and says that, so we'll see what's going to happen. But basically, people do believe that it's very clear that he will resume another aggressive rate cut. Now, the interesting piece that I also want to point out is that Turkey does have some ability to still maneuver within their rates of cutting them and moving them about, right? And they are basically going from 8.25 to 10.25. So if they're going to reduce it, imagine if when 2020 kind of hit, if U.S. rates were 8% and we're able to cut it down to zero. I mean, that would have been a huge help. Instead, we went from like 1% to 0%. Like it's not as big of a move. So that's one thing that Turkey kind of has going for itself. But again, we'll see what's going to end up happening because none of us know. In short, we expect this to be a first salvo in that what ultimately culminates as a full-blown currency crisis for the Turkish nation. And while Erdogan might try to impose capital controls, it won't last for one simple reason. The Turkish central bank is almost out of FX reserves. And you can see that this chart really clearly shows of what's happening. So here is their gold reserves right down here. Foreign currency reserves excluding country swaps. Foreign currency reserve with the country swaps. And then total. And, they have been kind of burning through it. We've been looking at how they're actually selling gold. If you will recall, we just did it on the show not that long ago, that they're actually selling gold and are net sellers now, not net buyers of the gold, trying to basically prop the whole thing up. Now, a lot of the people have been thinking and talking about, and I am one of the people that also believes that Bitcoin, because we're going to be talking about Bitcoin, that there's going to be a country that is going to step in and start adopting Bitcoin standard, just like Michael Saylor did for MicroStrategy, right, of adopting that as their sort of a treasury account. There's going to be a country that is going to adopt it, and maybe not as all the way in, as the MicroStrategy did with their cash, but they might do it at 10% of their treasury, or 15% or 20%. And it's probably not going to be a large European country or the United States and stuff, but it is going to be a country. And everybody's like, it could potentially be a small country, and it wouldn't shock me, wouldn't surprise me. Maybe under Erdogan, maybe not. I honestly don't know, but it wouldn't surprise me if a place like Turkey, that is experiencing these high volumes and high problematic things, might be one of the first countries that does it. And it's going to be very interesting to watch, because when one does it, I think there's going to be many other ones that come in. And I'm not the only person that is talking about this and thinking about it. I think that there's more and more people that are starting to think in those terms. Now, that is amazing for Bitcoin adoption as a whole. And it's probably going to do miracles for the prices. So it's going to be a very interesting component. The other piece that is also interesting with this whole printing and stuff is that you'll recall that we've done a show and we've talked about the Bretton Woods 2.0. And if you haven't seen it, of course, it's in the YouTube channel. So just go Money Matters. You'll be able to actually find it. We've done it fairly recently because it's a fairly recent development. And one of the things that some of the folks are talking about prominently, Raoul Pal, who's a microeconomist, macro guy that is talking about stuff. He's very bullish on Bitcoin. He is the founder, co-founder, CEO of Real Vision. Has his own research and analysis kind of stuff. So, he's definitely been around the block. Super intelligent guy. Explains things very clearly. Truly a treasure to kind of watch and learn from him, kind of hear of his thinking. But he's also talking about the fact that same thing that we've been talking about here, that Simon Dixon, for example, is talking about as well, is that this was a call for all of the countries to unite and basically debase their currency together, because at that point you don't have these weird FX problems and stuff. And so you may not necessarily notice it as much, but that does paint a really, really nice picture, not just a narrative, but a likely profitability for those that are holding hard assets. And when we think about, the deflation kind of scenario, we do know that we're dealing with a deflationary when it comes from the monetary component. But when we're thinking about some of the other components, we are very much hitting inflation, right? So food has gone up, lumber has definitely gone up. We've been following it here on the show, and I've been sharing with you my woes of trying to do construction and upkeep properties and stuff, with the lumber increasing as much as it has. Thankfully, it's starting to come down, so maybe there's salvation there after all for me. But the other pieces that also have gone up tremendously, if you think of inflation in a global thing, not just the food and energy and housing and that kind of stuff, you can also look at it in the asset prices. So what do we know about asset prices? Well, the stocks are really up, higher than they have ever been. Now, is it a bubble? Is it not? We're going to talk about that in just a second. Real estate has gone crazy on up, right? Again, bubble, not bubble. We've been talking about it and talk about it every Thursday. So stay tuned for that as we uncover together. Cryptocurrencies have gone up. Is it a bubble? Not? Well, that we're going to talk about today here. Gold has gone up. So commodities are, kind of going up, I guess. So it's a very interesting sort of dynamic that is being created that I think is very, very important when we think about all of this stuff. So here we go. Are we in the bubble? Are we not in a bubble? So here we go. Textbook definition of late cycle in the stock market. So here's an argument that perhaps we are in a bubble. The single best measure of valuation, according to Warren Buffett, currently sits just off its highest reading in history. In other words, the stock market has never been as expensive as it is today, and forward returns will likely be exceptionally poor. Downside risk has also never been greater than it is today. And this is that Buffett indicator, and you can see that we've had like a high, then we kind of came back to the low. This is 2007, and we've just pumped like crazy up here. So we are witnessing an unprecedented valuations. Those extreme prices have been driven by extreme greeds. And here's the margin debt, which also has gone I mean, this is a hockey stick. If I've ever seen one, this is definitely a hockey stick in a creation, right? And then, of course, we have the technical analysis, and it's basically saying in analyzing the strength of the trend, we can use a very simple metric like RSI. In the case of 18-month RSI, oversold readings have proven to be good long-term entry points. Overbought readings, however, have merely indicated a strong uptrend that may last several more years. By this measure, the strength of the current uptrend peaked nearly 3 years ago and has only been weakening since, putting in a clear pattern of lower highs. And you can see right over here, the gray line is the S&P 500, right? And then the RSI is right over here. And you can see, right, high, we kind of hit over to the oversold, then we overbought, slightly lower, then way oversold. Then we went into the overbought yet again, hit a little bit below it. Excuse me. Well, there goes that. There goes that. So, um, I don't know what it is, but clearly, allergies are back on. So it went up slightly and kind of is coming back down. So you can see that this is 2000 and no, this is the late 90s, right? Then like the 2003ish or so. This is what, like 2008, 2009, 2015, 2018, 19, and here we are in 2020. These three market indicators paint a picture of an extremely overvalued stock market driven by speculative euphoria. So, this particular article argues that we are really in a big trouble. Now, before I talk about this thing, actually, you know what? Let's talk about this thing. So, if you will recall, in March, I think I did a video talking about how in February at the high, Bezos sold a significant amount of his stock holding. And now he's actually sold another large chunk of it, $3 billion to be correct. And of course, he's laughing all the way to the bank. Must be nice. But anyways, so what has happened? Well, you will see that this is the part where he actually sold. Then we had a dump. Then we've actually had this like crazy rally that has gone up. Then he sold in August another 3 billion worth of stocks and dumped 1.8 billion worth of stocks back between January 31st and February 3rd. So what he dumped then is nothing as to what he's done in August and what he's done right now in November. Bloomberg calculated that back in February, that in the 15-year after Amazon went public, Bezos sold a fifth of the company for $2 billion, right? Today, a fifth of the company would amount to roughly $324 billion. And so for me, I look at this stuff and go, the insiders are selling. Well, the insiders are selling. What does that mean? Well, it means that they're expecting that the market may go down. Now, he could be selling for different reasons, right? Funding his foundation, whatever research thing that he wants, buying a brand new yacht, whatever, right? Like taking it off. But they seem to have a very uncanny ability to sell at the top and then kind of potentially rebuy at the bottom. The interesting piece for me when I think about this stuff is this crazy thought of 5% of the company was what 2 billion 8 months ago. Now it's 320. Talk about the hundreds of x's that this thing has gone up. Now, economy hasn't improved hundreds of x's. The virus is not gone. The lockdowns are actually restarting all over again. The unemployment is still high and restarting all over again. And so, while yes, Amazon potentially more people are using and getting on it, I'm going with like, yeah, but like how? If people are suffering and don't have as much money, how is it benefiting and stuff? Is it really up hundreds of X's, and I would argue no, it's not. So that means that it is highly overvalued. So that's kind of where I'm thinking. But then we've been talking about, I was thinking with this whole uncertainty, stocks would not soar, but they did. They have been going up. U.S. equity market roared higher this week. Nasdaq rallied a stunning 9.5% on the week. Look at this chart. I mean, just went parabolic. Look at this crazy, crazy stuff. This was the best election week performance for stocks since FDR in 1933. Or sorry, 32. I apologize. Worst election week performance for the dollar since Bush Sr. in 88, and the best election for gold since the end of the gold standard. And of course, all of it means everything is awesome, but as stocks soared, the smart money started to leave. So here we go. This is what we're seeing. This is the August. Remember, I told you Bezos sold in August, and they are starting to leave. Smart money means that large chunks of these in large investors and stuff are leaving, and of course, the Dow is kind of staying flattish over here. Value of the stocks were trounced relative to growth stocks after the election. So Russell 1000 value stocks are just basically coming down. Gun maker stocks are up since there was a more higher probability for Biden to become president than Trump, but again, hasn't been decided yet. Banks, nothing but fangs, way on up. Volatility collapsed. I thought it was going to go up. It went straight on down. VIX really plunged this week, and I mean, it just went kaboom, which is absolutely crazy. And of course, it's we've seen this sort of like a crazy noise of like things are going to happen. Nothing. It's dead. Treasury yields were slightly lower on the week, but not by much. 30-year yield rose back to 1.6% after bouncing off of the 200 moving average. The real yields surged this week, and the gold surged as well. Dollar was up leading to the election, and then took a giant dump back down. And of course, here we go. You can see that it's crashing back down to lowest since May of 2018. Turkish lira, we've already discussed, collapsed against the dollar. It's been collapsing against everything, and it's quite troublesome, but we've been just talking about it. Cryptos had a huge week, with Ethereum outperforming everything else. That is key. You want to stay tuned in, because we're going to talk about what's been going on. Take a look at some of the charts, so don't go anywhere. And of course, this is what's happening. Bitcoin pushing up to around 16,000. We were at that 13. We've been playing around with it, and then boom, we just hit 14, smashed over 14, and went into 15. Now we're consolidating in the 15s, and of course, we're going to talk a little bit more in just a moment. Commodities have actually gone up, and the silver is outperforming all of the commodities, going back up to $25. Gold futures pushed back above 1950, and now we're going to hit this sort of resistance, and let's see what happens. Oil basically came back on down, started to roll back down, and now the question is, what happens next? Here's the S&P. Is it going to be the 87, where it just kind of went straight on down and sideways for the most part, or is it going to be the 2009 when things kind of go up and then start to come down? That is the key question, but I do want to point out one of the big things of the smart money dumping, because this is the key of the story. As you can see, they are running out of the market. The red one is them, and you can see they're clearly exiting the market. And what they're saying is, we have seen this pattern before, and it did not end well. So where did we see it? Where did we see it? Well, we saw it right over here in the late 2018, no, so that's 2019, my apologies. That we've seen it right over here. Then we've seen it right over here before the Dow just took a giant dump here in the March of 2020, right? And smart money, of course, was out and then bought in, and kind of has been slowly selling. Now they're selling yet again. But it's an interesting piece is that look, they buy when things go down, they sell when things are up, and it makes sense. And now they're talking about, hey, There's this giant greed that is happening, and everybody thinks that the Fed QE is what's going to come in, and it's going to bring stimulus, and it's going to prevent the evictions, and the rent control is going to come in, and UBI is going to come in. But you have to remember one thing. Even if that all happens, right? Even if Biden is pronounced a winner at some point in the future, they'll have to pronounce somebody a winner. Uh, he doesn't get in. He doesn't step in until late January, which means nothing happens until February, March. And they can make it retroactive all they want, but they can't travel in time. I'm not going to get any money today from what he decides in February, right? And neither are you, and neither are the renters, and neither are the banksters, and neither are the landlords, and neither are the small businesses. Nobody's getting anything right now. It's dead. It's over. And they can't agree. And even right now, when the election being done, we have the same thing of Pelosi saying, yes, we're back on. We want the giant thing, and the whatever the other one is like, oh, everything is back on. They want me back, and they don't want this. So we're back into the crazy. We're back into the crazy. Nothing is going to be resolved, but of course, it's coming on the hope. However, I always say, hope and pray are not a strategy. You gotta be smart, and you gotta do the strategy piece. So, with that being said, we're turning over to cryptos because, oh my gosh, it's been beautiful. What a run, what a run, what a run. Crazy. All right, let's refresh because this puppy has been on for a little while. And now with the refresh, we can see that Bitcoin is actually coming slightly down, down 0.6% for the 24-hour period, up for over 14% in 7 days. That is huge. Ethereum, and of course Bitcoin is holding well above 15,000. It's been holding well above 15,000 for a little bit now. We're going to take a look at the chart in a moment, and now it's basically consolidating, which is a good and healthy thing to have happen. ETH has finally broken over 400. Remember, we've been like trying to hit a bounce back, trying to hit a bounce back, trying to hit it, and finally it hit it, and it's holding above it now, performing 3.4% in the 24-hour period, and almost 20% in 7-day period. Right now trading at $459.15. Then as we scroll down over the top 100, Link has performed incredibly well, pumping well over 12% in 24-hour period and 17% for a week, trading above $13 for the week. XRP is up as well at 26 cents, but it's, Tether, I'm not even talking about it. Bcash is up 5%. Binance coin is up, Polkadot is up half. So what we're seeing is, as I scroll down, is that you can see in an hour we are seeing quite a bit of red, but when you look at the 24 and 7 day, we're seeing mostly green. If we take a look at sort of the biggest gainers, YFI is up again 51% in 24-hour period, 40% in 7 days. DeFi is starting to come back up, as are the altcoins. That's right, we're starting to see everything starting to move. At first, it was sort of that altcoins would kind of look like they were dying. Well, they were not dying, but they were definitely slowing down. Bitcoin then took the race. It started to go on up. And as it was going up, all of the altcoins were not doing much of anything. Then, of course, Ethereum woke up, started to go on up. Altcoins also woke up, and they all started to pump. And now we're entering the bull rally of the bull rallies, and this is going to be absolutely amazing. And I do believe that this one is going to last well into 21, 22, maybe even 23. So this is going to be fantastic bull run. What a beautiful day to be alive and witness all of this stuff. I know sometimes it's crazy, sometimes it's scary, sometimes it's uncertain, but it is quite beautiful to be able to see all of this stuff. So the biggest bumper, of course, you can see bunch of the coins. Sol is up 37%, Aave 25.2, Band 19.5, SNX 19.5, EWT, the Energy Web 19%. As you can see, as we keep on going, I mean, things are up, on up, on up. On the biggest losers side, it's really you have a few that have come down, but again, it's single digits. KRT, I don't know what that is. KRT is down 4.2%. Mana down 3.1, Ampliford down 2.8, Nexo 2.5. So not much of anything. Like, yes, there are some that have gone down, but not much of anything. On the 7 day, Vite is up 67%. I don't know what that is. Sol up 64.5, Ave 56.5, Ampliford Pump 55.6. These are some insane, absolutely insane gains. And of course, the question that everybody has is Bitcoin now going to blow off the top? I mean, we've gone up, we've seen some of the stuff. So we're going to take a look at the charts in a moment. I'm going to share with you sort of my thoughts and ideas before we call it a day. But I did want to share this particular article with you, with the on-chain analyst Willy Woo, is basically saying that no, it's not really likely. So he's basically, we've kind of come really close, consolidating. He is saying that the blow off top is unlikely for three main reasons. Reason number one is that Bitcoin is moving from exchanges into individual wallets. People are no longer willing to trade this puppy. I think more and more people are starting to understand this is a store of value. It's not, I mean, I know it's called cryptocurrency, but it's not currency that you use for trading, although some people still do. You basically buy and hodl. Hodl, 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 right? So that's what we're seeing. When we see money move from exchanges into the wallets, it means people bought, they're not going to be selling. They're going to be hodling. Now, of course, here we go. This is what's happening. The net flows, BTC exchanges, and as you can see, this was what, 2018 and stuff, when things just went on, and we've seen kind of, come back out, come back in, starting to kind of pick up, but it's definitely on the lower end of things as far as like the prices go over here, right? And then you can see what's happening with the wallets, and look at this. As the price is pumping, more and more actually getting out of the exchanges, not into the exchanges. Number of hodlers is rising. Number of people that are actually going in, buying and holding on to this thing for as much as they can is going up. And of course, this is significant. And of course, the lower risk of deep correction is what is known the spent output profit ratio, is an indicator that shows whether investors are taking profit on their unrealized profits. What is an unrealized profit? Well, I buy a Bitcoin at $1,000, it pumped to $15,000. I have a $14,000 profit that is unrealized, meaning it's just kind of sitting there, but I'm not doing anything with it. Typically, when we see the data that we have a large number of investors who are in profit, they actually will go in and take some of that profit away. Glassnode data shows a fairly high number of investors took profit in the past week while the price was still pumping. This is interesting because typically we would go in, we hit the thing, people actually sell, the price comes down, it meets a buyer somewhere over here, they buy it up, then it kind of goes on up, right? What we've seen is that people have been selling, but the price has been staying steady and going on up. Investors have already started to realize their profits as these coins have been absorbed by the market. That basically means that we are having way more buyers than we do sellers, and of course, supply demand whole process repeats. When you have more demand than you have supply, the price keeps on going up. And the beautiful and pristine thing about Bitcoin, as you know, has a capped supply. You cannot change it. And of course, it's 21 million, but of course, it's, some millions have been lost. So it's actually, folks are saying that it's going to be less than 21 million. Of course, overall conclusion, Willy Woo is saying, not expecting a blow off top, waiting for a consolidation to complete, then more bullish action. In the short term, the risk to the ongoing Bitcoin rally remains the overcrowded derivatives market. As such, analysts anticipate some consolidation, but not a deep correction, at least not for now. And I agree, but consolidation is really, really, really good for us. Now, I wanted to take a look at the chart and go away. So here is the Bitcoin USD, and as you can see, it's definitely taking a lot of pump. And so here is the part I was playing around for my own entertainment, but trading view saves your playing, so you get to see my playing as well. I am horrible at drawing on these things, but like for me, it just makes sense. Good enough is good enough. So what we've seen is right, like it would go on up, kind of hit some sort of top, you know, trade in the channel, because if we were to take this right over here, right, and extend it right here, and extend it right here, you can see that it's trading in a channel. So it goes on up, bounces around in a channel, then it goes back on up, right? Comes kind of back down, so we can probably see this as well. And look at the beauty right over here. You see it? Now that I can extend it, it's not quite accurate, but you know, work with me. But right, what was previously the ceiling becomes a floor. This is really important. It doesn't break over it, and then it bounces back on above it. And so now what we've seen is we've gone up. Okay, can extend this right over here. We've gone up, so this was a ceiling, probably going to become a floor of sorts. But the interesting piece to also note, this is super not straight, but that's okay. Interesting piece to note is that if we were to come back down, I am guessing on the low end it would probably be in the low 1200s, which I know it's a big old dumb thing, but it's still amazing. And part of me is like, hey, if it came down, I'd buy more, you know? So I wouldn't necessarily be heartbroken about it, but you can see of what's going on that we have been pumping quite nicely. Let me see if I can move this quite nicely. It came back up above 12. We've hit that 13 piece, right? I wish that it consolidated a little bit longer before we moved on up, and then we just had this giant candle that went basically from 1400 into 14,000 into $15,000, and now it's moving on sideways. And of course, this is on the 1 day. Let me see if I can take a look at 1 hour. Okay, so let's take a look at what's happening in the 1 hour spectrum. And as you can see here, we get a little bit better information of what's going on, right? So let me zoom out so that you can really see it, right? So it goes sideways, it pumps up, it goes sideways, it pumps up. So we are basically right now, right? This whole going sideways is really, 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 really good thing. Incredibly good thing that it's consolidating sideways, you know, and that is absolutely amazing thing. Now, of course, here is the 200, the 50-day moving average, and it's coming and sort of looks like it's going to bounce right off of it. For those of you that are thinking of trading it, I don't trade Bitcoin. I mean, every so often I'll go in and trade and play around, but not with Bitcoin. Certain things you don't gamble with, right? Personally, my health and my wealth, I don't gamble with. You know, I'll go in and look at some of the trades and stuff and see if I can, you know, I don't know about corner or squeeze the market, but you know, get the most out of what I can. But this is absolutely amazing component if it actually continues, and it looks like it will. I mean, we have been staying well above the 200. 50 has been above $200 average. The MACD is you know, showing obviously a little bit of bullish. It's coming back down, which means we might have another opportunity to go in and stack it. But again, this, as you can see, it's beautiful thing when it happens. This is my drawing from the 1 day piece. Obviously, you have these micro movements and stuff, but I think it's absolutely phenomenal of what's going on. Now, I do want to change it over to Ethereum. So what's going on with Ethereum? Well, Ethereum has actually pumped up quite nicely as well. And as you can see, this is where it was back in the 2017, 18 craziness and stuff, where it was trading well above $1,000. Since then, we've come down, and it's been consolidating, kind of slowly moving, but it's starting to turn, and this has a strong potential to make it into an amazing, amazing long-term bull run. The interesting piece that what is going on is that, hold on, excuse you. The interesting piece that what's going on, it's been going sideways for a very long time, that 300 level for like ever of what it seemed like, and now it finally kind of broke over 400. Let's see if it's going to hold it. It's been holding it for a little while, if we switch to the 1 hour chart, right, you can see, look how healthy this is of climbing on up. And you can see all of the consolidation that was happening. Finally, the 50-day moving average has broken over the 200. And so this is looking incredibly bullish for the whole thing. We'll see how well it holds up, but I am personally very excited about it. Now, one of the reasons that also could be that why Ethereum is pumping as high as it is, because of the 2.0 staking and running a node and stuff has been announced that it's going to go live on December 1st, I believe the announcement was. And now we have a few different places where individuals that hold 32 ETH can actually go in and buy it. Now, the interesting piece is that 32 ETH will come at the current price. What is that? 32 ETH is at 464, right? Comes to about $14,848, while Bitcoin is currently trading at $15,517. So that basically means that it's a bit cheaper to get 32 ETH than it would be to get 1 Bitcoin. But again, they are very different, so they shouldn't be compared in that regard. I think both of them are very strong winners and contenders, but there's a slight difference. I think one is a store of value, the other one is going to be basically the store of the brand new movement and momentum of the whole thing. If we take a look at the Ethereum Bitcoin change, right, like exchange one versus the other, you can actually see and follow. So you don't always have to just look at Ethereum versus dollar or Bitcoin versus dollar. You can actually, the kind of cool part about the new technologies that are developing, right, and with it, the trading view, is that you can really start comparing assets to one another to really see what's moving where comparative to what. And that is something that is very interesting to kind of look into what's going on. So ETH to Bitcoin, as you can see, it's been definitely on the bullish end. It looks like it's about to close right over here. So you can see the 200 moving average and a 50-day moving average. They're starting to slowly but surely kind of come together as this keeps on going up and meeting. And of course, Ethereum has outperformed Bitcoin, but that's typical thing. And of course, it's always one, then the other one moves, then the other one comes back. So there you go. Hopefully this was something that you have enjoyed. Hopefully you've learned something. If you have, smash the like button, forward it on, put the comments in, subscribe, hit the bell button, and I will see you tomorrow. For everybody else, we're going to go into the Q&A in just a second. For everybody watching this elsewhere, not on onedealaway.com/live, I bid you a great weekend, a great day, and I will see you tomorrow. Only if, thumbs up, subscribe, bell button, and until then, stay forever money blessed. And do remember, you are only one deal away.